What's up, everybody? It's Omar. It is Saturday, March 21st, 2020, 3:49 p.m. And I want to make a video talking about support and resistance, overall trend, and how to know when and where to attack. So, I've been very bearish on the market. We are in a bear market. And lately, all my, rants have been mostly about the market and stuff. And I know I've been gloom and doom and really need to be focusing more on technicals. And we're in a bear market, guys. For most of you who are trading, probably never seen a bear market. I've never traded in a bear market. Bear market is different than a bull market, and the market basically exploded. The bubble popped, especially because of coronavirus, and the economy basically stopped all over the world. I'm in New York, and it's crazy. Like literally everything's shut down. So it's gonna be like this for a long time. Now, you can make a lot of money though. Taking a lot of short positions and put positions, identifying the key levels to get in. And that's what I'm going to talk about today. Now, the SPY, SPY, this is the stock that kind of drives the market. This is where all the Fortune 500 companies follow. So when the SPY goes up, most of the stocks in the stock market follow up. And when the SPY goes down, most of the stocks in the stock market go down. So this should be your driving force, and you should be leveraging this to kind of figure out where the overall trend of the market is. Okay, so you can see the Dow had another ugly day, and you're gonna have green days, in a bear market. It's not necessarily always gonna be red days, but those green days should determine where your entries are if the overall trend is bearish. So let's talk about mapping key support and resistance levels. I'm gonna give you the gold, guys. So let's talk about the SPY. Here's the SPY right here. What you want to do, guys, is go back as far back as you can on the chart. So I have Thinkorswim. This is my platform, and what I'm going to do is I'm going to go to time frame, and I'm going to go to is it intraday? No, daily. I'm sorry. I'm going to go to the daily, and I'm going to go down as far back as I can, max available, and then I'm going to go down. Let's go to the quarter, and then you could do the month for the quarter. I mean, you could do the month for the quarter. Technically, you could do the year too, but I'm gonna do the month, because it can identify most of the levels with heavy volume, and you can catch some good scalps on the way down. So I'm gonna do month now. Okay, as you can see, we've been in this ridiculous trend since like 2008, right? This is where rates went to zero, and then stock, the Fed started lending, and stocks just started exploding because they just started buying back shares. That's why this run up has been this way for so many years. Now, what you want to do is identify the key levels where the trend has shifted. You identify those levels, and what you're going to want to do is when the stocks break below those key levels and close, the closing candles below a key level on an hourly time frame, you tack short. If it breaks above and holds, you go long. Basically, that's simple. Don't overthink trading. So, I'll start from the top. So I'm going to map this 339.08. And if you want to get specific, so let's say like I messed up right here. So oops. So I can edit this, and I can put 339.08. So what I did was right click edit properties, and now it's exact to the point. Now look what happened. This thing just had, for the last 2 months, it's just gapped down. So this is a key level, right? Because it bounced off here, and then it gapped up, and then it bounced off here, right, on the way up. So these are two critical levels. That 285 is critical. It needs to get above it and hold it, all right, in order for the market to be bullish again. I don't think we're ever getting back there. That's just my personal opinion. I hope I'm wrong, but that's my opinion. Now, at the end of this month, or in this month currently, because right, we're in March, still hasn't ended, we're down here, like this 228.80 level, right? So if I wanted to be specific, the low is 228.02. So I'm going to map that. 228.02. Okay, now before I go and I map these other levels, let's talk about this for Monday. Super critical. So what you want to do is, and this is a good buddy of mine who trades, he uses this in all his to identify his trends, and I strongly agree with it, because I think it's the best way to kind of get a strong sense of the overall trend of a stock, right? So if you go to an hourly time frame, right? So I'm going to put this 20-day hourly time frame. What you're looking to see is the stock either close above or below the actual support or resistance, depending on whether you're below it or above it, on the hourly candle, and that gives you an overall idea of where potentially the trend may be heading. So if you notice here on the hourly, after hours, right, when the market closed, look what happened. It could not hold above that 228. You see how it attempted to gap up and then it got sold off. Look at the selling pressure each time, and it closed below that candle. That's how you know the overall trend is. And look, on this third candle, it didn't even attempt it. Now it's like completely below it. So if you see this, you go, okay, well, it looks like the overall trend is bearish because it completely closed. It didn't even attempt it at this point, and it could be going further down. Now, let me go back and let's do max available and let's do the month. So now what we want to do is we want to then identify the next trend below. So where did the stock pull back? So as you can see, it gapped up here and it pulled back and held here. So this would be a level that I would be looking to specifically see. So I personally think that if it can't close above that 228, it's heading next to 208. That's the next level we're heading towards with the SPY. Okay, so you got some nice room on the downside to 208. So you can get those puts, you can short, and you can make some serious money going on the downside. All right. Well, you're gonna say, well, Omar, I like to trade. You know, I'm in and out fast. So what do I do then? You apply the same strategy. I trade off a 2-minute time frame. That would determine how I get in and out. And you notice on the 2-minute time frame, see, look at those wicks kept getting all that selling pressure. So if I see this, you know, and I see it can't hold, I'm taking a short position on those pops, those rejection of those pops. What I would do is I would just put orders out there and just kind of see if it reattempts these levels. So if like I seen something like this, I may put a couple of orders up near these levels, short orders. Just leave them out there, called fantasy orders, a lot of people call them, and just see if I get executed, and then just risk right off the top, because then it's low risk. Because you see it's like double, triple topping, and then just write it down. That's how I would do. Now, if let's say Monday it starts running up and it pulls back and it holds and it pulls back and it holds and then it starts moving, then I'm going long, you know. But I'm looking to potentially get out here because this is kind of where it gapped up to and kept selling off. All right, so I would have orders already out there to sell some of my position or maybe all of it, depending on how fast I want to be in and out. In this market, you don't want to hold too long because it's crazy. So that's how I trade it. That's how I play it. I'm giving you the gold, guys. This is like the shit that you should be really learning from your gurus. All right, so now, okay, so now we identify the next level down. Now, if I wanted to be specific, it's actually 208.38. So if I right click, go to edit properties, I put 208.38, and then I go down to the next one. So this is, look, when it gapped down, look where it found support right here. This is a super critical level of support right here. See, it kept getting bought up every time it looked like it wanted to dip. So this 181, so you look for the lowest candle in this trend, which appears to be this one, which is 181.02. I have 181.10, so 181.02. So all right, so this is where buyers stepped in, right? And it went up, right? This is all psychological, guys. If this doesn't hold, people who got in here are gonna panic and it's gonna push down. There was a lot of buyers who got in here, right? If it doesn't hold, what do you think? Look at all this. Look at all this. So if it can't hold this, guess what's going? Guess where it's going next? Right down here to 181. If it can't hold here, because this is where a lot of buyers stepped in. This is super critical level. If this breaks down, there's a lot of areas along the way where people stepped in, but the most critical level, a big area. Look at this big candle. It's probably heading to 107. And I know that's scary to a lot of you, but that's where it's probably heading. That's the next level down. Now, there's also a level where this is where people stepped in and bag held right here. So that 158. So that's another level. All right. So that's what you're doing. You're looking to see where buyers stepped in and where sellers stepped in and got caught bag holding. So if it gets down here, and you can see where it got bought up right into here. So this is another critical level. So if it can't hold that 158, and to be exact, it's 157.52. So I'll fix that. 157.52. If it can't hold that, this shit is heading to 107. So each time, guys, it breaks below. So remember, on the hourly candle, if it closes below one of these levels of support that now become resistance, you know that more than likely the stock is heading to that next level. All right, and that's sort of how you do it. Now you're gonna say, hey Omar, what about these levels? Can I potentially map these? Because technically they're like fine, you know, this bag holders here, so couldn't this technically be a level? Yeah, so you can map all those levels. You know, you can map them if you wanted. You can map here, and then you know, technically you can map this level here, and you can map, you know, this level here. But to me, this is very clear. Like, this is where the buyers, I look for those big candles, because these are where the buyers really stepped in. And then the next level obviously here is the low, which is 67.10. So you ask, if you're asking, hey, what do you think it can retest 67.10? Yeah, guys, I think we're heading, my guess is that we're heading to new lows on the SPY. I think we're gonna, you know, a lot of people have been asking me, where do I get in? And I tell them we're nowhere ready to go up. I mean, people don't understand that millions of people are about to be out of work, and the economy is going to tank more because of that. So people think, oh, you know, it's the coronavirus, and once the virus goes, everybody gets back to work. Unless the government is going to just keep paying people salaries and keep like giving businesses money so that they can stay open. If these companies and small businesses start going under, oh guys, I don't know. I'm very concerned, but that's neither here or there. So from a technical standpoint, that's all you do. So let's say, guys, it gets down here and it holds to this 208 level, and you know, you see it close above. Now, even though the trend may overall be going down, you can catch some of it on the upside. You know, catch some of the upside and look at these areas above as resistance, and you can map them. So, you know, on the intraday, you're looking for those levels to potentially sell your position. You can put orders out there that'll keep you disciplined. All right, and that's how you do it, guys. That's how you do it. So this is the actual ticker that you need to be watching to get a sense of where the direction of the market is heading. All right, so it's super important that you have this chart somewhere. Okay, I'll map one more chart so that you can get a sense, and then you can just do this for all your stocks. All right, you do this for all the large caps. I mean, they're all overextended. They're all gonna tank a whole lot more. All right, you can do this for every single stock. Do the same exact thing. I'm gonna use one more stock, and then I'm gonna end the video because I know people tune out too fast. Let's use Amazon. Amazon's up so damn much that I'm gonna pull up Amazon. Let me minimize this. Where's the chart? Was this the chart? Okay. So let's use Amazon. All right, same premise. Again, I'm going back 20 years, monthly time frame, right? Let's do the same premise. Now, Amazon, imagine if you would have bought Amazon back here in 2001. Woo, you'd be rich, man. So, right, Amazon has been, I mean, just getting decimated, right? So, right now, the high is 285.95, 2018, 85.95, right? So, if I want to be specific, I'll map that. So now it's gapped down. It's found its support at 16. And I'll just look at this. The close price is 1626.03. So let me fix this. 1626.03. All right. So before I go any further, let's just really quickly, I'll put up that 2-day time frame. Oh, it's okay, it's up since then. All right, so let me go back. So let's go back. Max available month. Remember, you could do the quarter. You can do that as well. So let's keep going down. All right, because it kind of got bought up, right? So here's the two levels. This is important because it got bought up and it's above this now. This line here, which is the low of this candle is 1811. This one's 1815. So this one's lower, right? So 1811 would be the one that I would really use. 1811. I don't know what number that was, but I know it was 1811 something. All right, so it was 1811.13. That was the exact number. So I can, if I wanted to be exact to the penny, there we go. And then I'm gonna map this above because, you know, Amazon could bounce up even though all the rest of the stocks are going on because everybody's gonna keep using Amazon. So right, the line above it is 196.33. I have 196.34. I'm off by a penny. So just to be completely accurate, I'll map that. Okay. So now you're gonna say, hey, you want to map these levels above. So I would map the highest level here technically, which is this, which is the 255.72. So 20, 55, 72. So I'm going to map that 20, 55, 72. All right. So these are the key levels above it, the key levels of resistance above it, and this is the key levels of support below it. So like if I'm just going to go down here. So now, right, the overall trend is down. So now, if I'm looking to see what's going to happen, and you see it's been on an upward trend ever since. He sold off because the SPY sold off. So I told you this moves with the SPY. So let's say come Monday, this thing closes below 1811 on the hourly time frame. Then you can see that potentially the trend is overall bearish, and that eventually it's going to retest this 1626. And we know that's a key level because on the monthly, that was a key support level. That's why. But you can also use these intraday levels as well. So on an intraday time frame, if you're day trading, you can also, you can map these levels as well. So you can do that as well. See, because it bounced here, then it gapped up. So these are levels where it bounced off on the trend up, and you can look at those key levels as well. And you can map the key levels above as well here if you're doing intraday. But I'm focusing on like the overall trend. But you can also map these levels to look for potential entries if you're scalping. All right, if you're scalping. So, but if we're talking about key levels, right, which is what I want to focus on in this video to show you where you really want to, look for those key levels to potentially to really get into trades, right? Or these key levels. So let's move down, and remember these are those are like intraday. So that's why we have them there. We're talking about key levels, right? So if I'm looking at key levels, I'm not looking at this either. All right, I just wanted to show you that. Now what are the next key levels below? So the most critical obviously is this one. Is 13, is this 1307. So, and it's literally 1307 to the penny. That is super critical. Guess what happens if Amazon doesn't hold 1307? It is going to melt down, because this is where tons of buyers, 154 million shares on this day. If it doesn't hold this is heading all the way down to $929, which is hard to believe. So Amazon has a lot of support here. We'll see where it goes. Now, you can say, hey, Omar, do I map these levels here? Because technically people stepped in here on the run up, and then it got bought up here. Yeah, so you can map all these levels too, guys. You can map this, because in theory, it can stop here and then run up. It pulled back here. So in theory, you can map these two levels as well, just to get a sense. So you can map this, because kind of buyer stepped in here, and then buyer stepped in here, and then buyer stepped in here. So you can map all these key levels to get a sense of where, but the most critical is this. So if you want to like distinguish between like these and then this, where this was like a complete pivot where before it took off up, and this is kind of a complete pivot until it's up again, like these lines here, like this one, you can change the color. So like this is, to me, is critical. So for me, like, if I wanted to really call this out, I can change this another color. I can go here and make it red to really call out like this is a critical level. Like if it holds this is good, but if it breaks down, I know, ooh, I'm gonna make a lot of money, because it's gonna come down now. Now these are levels that you can map on the way down. So obviously it closed here, and then it closed here, but this right here, this level here, this is where it kind of held, defended, and a lot of buying happened here. So this would be an ultra critical level for me. And here, if I want to distinguish that between the other ones, I would like change the color. Like, just so like I know, like if it comes to these levels, these are critical. So you can play this out however you want to play this out, but just know that if it closes below these on the 1 hour, you know that the trend is still down, but there's a lot of areas of support on the way down. So you're gonna match these. So again, look, this is another level right here, right, where it kind of defended and took off, bounced here. Same thing here, right, gapped up. And this is a key level where it got bought up and it took off, right? And then here's another level, because this is kind of where it topped before it broke out. This is kind of where it pulled back and found support. And this is what you do, guys. You just find these key levels where the stocks, kind of like pull back and hold and then take off to identify and wait for those. And then if you're a shitty trader, which most people are, wait till the stocks reach these key numbers. sit on your hands and just wait. What you could do is you could set an alert. So let's say you want to see, oops, I can fix that, auto. So let's say I want to see what's going to happen here, right? Like this is a key level. What I can do is if I right click, I can create an alert. So I can right click on it and I can create an alert to just call out 111 or 111.13, and this thing will, and you can make a note, key support level. And that way you're gonna get an alert from on your phone and a message. You can add like a message tool here. I have many videos on my YouTube channel that go through all this, and you can know at this level this is critical. So if it can't hold this, I know that I'm gonna ride this down. If it holds this, then I know I can take this up, but just know you got a lot of overhead resistance. So just keep that in mind, and that's what you're looking for, guys. Key levels to do this. So you can do this on all your stocks. You can go to AMD, you can go to even your shitty dog shit, like BLPH is a shitty dog shit company, that I tried to short and I couldn't get filled and I knew it was gonna fade. But you could do the same thing on a stock like this, where you just basically you do the same exact thing, so I would do the same exact thing. Now the problem is just finding shares. Like this is so overextended, in a few days this is going to be down to nothing, but you can do the same exact thing. So right now, and I got pivot points here. That's another video for another time. But so right now, this is where it closed. All right, so I would be looking to see. Oh, and this is, see, in a stock like this, because for the month the trend is so, it just had one big gap on a day. Like, this is too much. You can't, for a situation like this, you can't use a monthly. Like what you want to do then on a situation like this is maybe you do an hourly. You do an hourly, and this is because this is oops, like something like this, you just base it off the hourly. So like, you come here and this is a shitty stock, and you can see that it was at $3 a couple of days ago. So the hourly, I would be mapping to see those key levels. So these are the key levels. Now if it breaks below this and bounces and holds, this shit is heading back to 3. The problem is it's fantastic, but the shares are going to be so hard to get and expensive that most of you can't trade them. That's what your gurus don't tell you. But they have you thinking that you're gonna bank with them, because they got access to the brokers and they're gonna give them the shares first. They don't tell you that though. So this is actually a key level of support. Resistance, and this is the key level of support. So what you want to see is if it holds at 1478, you can just take it for a quick stop long. But if it spikes and can't hold any of these levels above, and in a situation like this, I would map each level above on the hourly, because they all matter. So I would map all of them, and then this kind of held right here. So I would map all these levels so that when I'm looking at the stock on an intraday and I'm trading off of 2 minutes, especially a stock like this which is volatile, you have all your levels set to know where to attack. All right, if it bounces and it can't. So what you would do is if you're short and you don't want to blow up, what you do is, like, let's say if these are all the critical levels, and let's say you have a small account, but you have the shares to short, and let's say you can share, like, you only do like 500 shares. I would put a 100 share order here, 100 share order here, 100 share order here, 100 share order here, and 100 share order here, all short, because that is not, the probability that it gets above all this is very minimal, and you're scaling in and you're protecting yourself. That's how pros do it. That's how I do it. All right. And then you just let it do its thing, because once it does, it's going to spike, and all these people who got caught bag holding are going to want out their position, and then the stock is just going to dump fast. But I think it's probably done, and it's going to fade, and to get the shares it's going to be hard. And you do have another small little area of support here, but once it breaks below here, it's done. It's going back to 3. So so that's how you do it on a when you're trading these penny stocks, these shitty dog shit companies. So hope you found this helpful. That's how you map the lines. That's how you look at everything. Give me some feedback. Follow me on Instagram. Follow me on Twitter. Watch Old Trade, and let me know what you think. All right, guys. So have a great weekend.